what would happen if 30% of India's investor base, I'm not just talking retail, I'm talking overall,
Yeah.
30% of investor base in terms of value kind of invests in these assets? How would you see the macroeconomic landscape change?
Okay. That's a very interesting question because today the limit for capital outflows per individual is $250,000, which is the
Welcome back, everyone, to this exciting episode of Fintech Ki Baat, where we have Nitish Sahni, who's a co-founder of Paasa. If you haven't seen the previous episode, just go and check it out somewhere. There should be a link somewhere on your screen where Nitish shares his exciting journey of building Paasa from grounds up, and also a bit about his experience at UC Berkeley. And it's really interesting. You should definitely check out. Having said that, let's dive into our next segment called Dhande Ki Baat, wherein we deep dive into how this entire space works. And today we are going to be talking about the emerging space of global investments from an Indian retail investor's perspective. Uh, when you think about global investments as an investor, a first thing that normally comes to your mind is either something like IND Money, wherein and I think there is one more app called FI that kind of does that. These kind of apps allow you to invest in fractional as well as direct investment. And what has really intrigued me is how essentially this is happening, because these are stocks not listed on any of Indian exchanges, right? These are stocks that are listed on foreign exchanges that are brought to Indian investors by these platforms. So today, Nitish is going to kind of take us through how that works, what kind of integrations happen, and also, maybe take us on a ride along for a journey of a transaction through this entire piece. So, having said that, Nitish, thank you so much for doing this. It has been really exciting so far, and we are super excited to learn more from you.
Yeah, of course. So do you want me to walk you through, how the infrastructure is set up for these global equities
Sure,
applications?
sure. Let's start up first. With the baseline. How did you kind of come up with the name Paasa? What does it signify?
Okay, that's a good question. So Paasa in Greek means world, and in Hindi
Means
or world,
world.
world,
Okay,
and in Hindi or Sanskrit it means luck. So
right.
it was a word that you know that came to me. I was looking up, what does world mean in different languages, and I saw that
Hmm.
in Greek it means Paasa, and then also Paasa means luck in Hindi. So I thought it's a great name to have. It has high recall value, so that's how the name Paasa came about. Um,
Interesting.
and the idea is very simple because we open up access to the world to Indians, so called it Paasa.
Now that you put it, it really does make sense. Yeah.
Yeah.
So
Um,
that's superb. Now kind of this space has really been buzzing for a while, as I keep on shamelessly reiterating it in this podcast. But
yeah.
uh, what really intrigues me is how does the transaction kind of actually work? What are the moving
Yeah.
parts involved? What happens in the back end? So since you have built in this space, I would love to hear from you on what
Yeah.
happens right from when I actually do my KYC,
Yeah.
invest my, let's say $1, and how does it kind of go there to the company that I've invested in, and how
Yeah.
does it kind of come back?
Yeah. Okay, so let's take a step back. Right? So the way most fintechs are built is you partner with a financial institution. So you are
Correct.
using the rails of a financial institution. And my job as a company is to see that why hasn't this taken off already, identify the blindness that these
Mm-hmm.
institutions have, and deliver a very good customer experience given all of that. So what we did is none other than what domestic fintechs, global fintechs do. We partnered with a financial institution. The institution is called Interactive Brokers. So interactive brokers, they have entities in each country, and they give access. They, by virtue of interactive brokers, we're able to give access to the world's exchanges. And
Okay.
interactive brokers obviously has APIs, so we integrated with APIs, with their
Mm-hmm.
APIs, and we built our platform around it. So, and that's the same way, you're in money vested. Um, even your domestic, your Jupiter money, they're also, for example, a layer on Federal. That's how they offer their
Right.
banking solution. So everyone is a layer. Every fintech is a layer, and then our job is to deliver a 10x customer experience. So interactive brokers. So that's the infrastructure, the core infrastructure that manages the execution and the custody of the
Mm-hmm.
assets. Then the second institution or the layer that we partner with is the banks. So you have your you have your execution platform, which is Interactive Brokers, and now you have to get the money from the Indian bank account to Interactive. Now, the leg here, this is actually the key insight that we have is that the money transfer process is actually not very seamless, and that's what's stopping people from
True.
doing global investments. And not only the fact that the process may not be, the process is out there, people know the process, but then a lot of people are concerned that am I doing this compliantly? If I've sent money overseas, will someone come knock at my door and ask me why I've used this, how I've used this money? Right? So giving the person the comfort, laying out the, putting out the knowledge out there, educating them. So that's our job. And the way we made that very seamless is we actually work with the 4 private banks in India, which is Access, Kotak, HDFC, ICICI. We've negotiated exchange rates for all of our customers. So the rate that they're getting is far better than what they would get going to the bank. And then we've streamlined the whole process. So they just have to come to Paasa and say that, okay, I want to move money from Kotak to the Paasa account. And there will be, the entire process from there on out, all the forms, anything that is needed. There's full visibility given. We've told them that, okay, the purpose code is S0001, which is investment in equity portfolio overseas. Even the form is filled compliantly, and we've told them that your bank might ask you, because the bank is the entity that has the AD1 license. So AD1 license is a license that is given to banks, and they are the only entity that's allowed. The AD1 holders are the only entities that are allowed to process transactions, process remittances for overseas investments. So
Understood.
the funds also, once they're in your Interactive Brokers, the bank needs to regulate, okay, was these funds used compliantly? Were they used for the purpose they were defined? So all of that, even that peace of mind, giving the statements, giving all of the visibility to customers, we give that as part of our platform. So number 2 is, so first institution is Interactive Brokers, second institution is the banks, and at the end of the tax year, also anything to do with taxes and FEMA compliance, that also we help with. The foreign asset schedule, for example, Form 67, 1042S, that's something that our platform generates.
Fair.
So end to end. So to take a step back, answer your question, money moves from bank account to Interactive Brokers. Interactive Brokers, the execution happens there, and then once the execution happens, there's a security that's being custodied by them. And at the end of the tax year, it's our job to do the reporting. It's the customer's job, and we help the customer to do the reporting of those assets appropriately.
So these securities that I invest in, they are in custody of these Interactive Brokers in this case.
Correct. It's always in the custody. So there's the broker dealer is the entity that custodies the securities. So for any fintech in India, no one's custodying the securities. So say tomorrow Paasa ceases to exist, Interactive Brokers is always going to hold the shares or the stocks of the customers.
Understood. Fair enough. And how many exchanges is Interactive Brokers connected with?
Oh, several. North of 50 exchanges. We are slowly, rolling out one exchange at a time. But they have, they basically give you access to the entire world. So you get the US stock market, the Swiss stock market, German stock market, Japanese stock market, London stock exchange, Singaporean stock exchange. They're rolling out Gift Nifty very soon as well, so that'll be interesting. But several.
Understood. And let's talk a bit about from the bank's perspective, right? So you mentioned that you've partnered with like top 4, top 5 banks.
Yeah.
So do I need to have account with those banks if I want to invest on Paasa?
You don't have to. It's just that by virtue of the partnership, we can give you much better rates. So if you're, for example, if you have HDFC and you're a bona fide HDFC customer and you come to Paasa, then we'll be able to give you better rates by virtue of Paasa working with HDFC or by virtue of Paasa working ICICI, Kotak, Axis. However, if you say have an SBI, you can still remit money. There are steps that are outlined on our app that you have to click this on your net banking portal, do this, do that, and then add the benefit. This is how you add the beneficiary, and then once the beneficiary is added, then you can wire the money through a Swift transfer. So those steps are added. You can obviously use the platform. It's bank agnostic. What you're doing at the end of the day, under the hood, what is happening is a A2 form is being filled with the right purpose code, and money is being sent to that broker.
Understood.
Under the hood, like not under the hood, but if you boil it down to the basics, that's what's happening. And this is all happening by virtue of LRS.
Fair. Makes sense.
Yeah.
So how much time does it take for me to like from when I actually debit the money from my account
Yeah,
till I actually get custody of, till I actually get acknowledgement of custody received of that unit of share price or
it's
share
real time.
price. It's real time.
Real time. So if you place it during market hours on a market order, it'll get executed instantly. If you have a limit order, it'll obviously get triggered when the limit hits. If you place a market order before market hours, then it'll get executed as soon as the market opens. So real time.
So does the fund transfer also happen real time in that case? The international
So
fund transfer that's happening.
so I'm talking about the execution right now. The international fund transfer, that's very much dependent on your bank. So for example, with ICICI, sometimes it happens the same day. So you can do a transfer in the morning, in the evening, it'll be in the Paasa account. Sometimes it takes a couple of days as well. So we just
Hmm.
tell our customers that expect up to 2 business days, but sometimes it happens the same day as well.
Okay.
But yeah, typically not more than 2 business days for the
So
funds to be
in
debited
that
in the.
in that initial step, when I
Hmm,
get the money debited from my account, so when the money is debited from my account,
your
till
Indian
the
account.
time it hits the PASA account, so as to say,
Yeah. Hmm,
that will take some time. This PASA account essentially is the money that is with the interactive brokers account, right? That is what you guys are reflecting in PASA.
correct.
So that will have a couple of days lag max. In some
Yeah.
cases,
So
it
from
could
your
be instant.
So say you have triggered the remittance from your
Mm-hmm.
Indian account, not more than 2 days, it will take to reach the PASA account. And once it's in the
Understood.
PASA account, then the execution, like I said, is real time.
Mm-hmm. Fair enough. Makes sense. Thanks. I think this has been really interesting to kind of help everyone understand how the behind the scenes works in this market. It has been a slightly at least a mystery zone for me till now. Having said that, would love to hear from you on what are your views on how essentially the investor landscape changes when
Hmm,
as additional foreign equities come into play as an additional option available, which people assuming that the trust factor is not a problem anymore for
hmm,
this thing, right? Once people have the trust, if I even put money in foreign equity, I'll be able to get it back easily and there are no challenges, and it is very similar to
hmm,
investing in local equity market.
hmm.
Once that happens, how do you see the landscape, retail investment landscape changing in India?
I think it's already changing. I mean, see what's happening in Gift City, right? You have
Hmm.
DSP, which has launched a gift or overseas mutual fund. Parag Parik's also announced too. So I think when you think about the landscape, the tailwinds are incredible. So first, you have people in India getting more wealthy, getting more financially literate. So they're realizing that it makes sense to perhaps not have all funds in India and have a little bit of global diversification in the portfolio.
True.
Then the second tailwind is you have, which is generally there's always a home country bias, by the way. So when you are an investor, whichever country you are in, you'll invest in those countries' stocks, and that home country bias exists for a good reason. Your policy, the government wants you to have a home country bias because they want they want the money, the outflows not to increase. And at the same time, these are the companies that you invest in the Indian stock market. These are companies that you interact with on a daily basis, that you see on a daily basis. So you just understand it better. But this home country bias is broken when your home financial market does not perform as much as you'd like to. And that's what's happened in the last year and a half. So when that
Hmm.
happens, that also serves as an additional tailwind for looking for other options. And when you
Right.
see a person holding Nvidia has generated super normal returns, and you are sitting with your mutual funds and not generated those returns, then that also becomes an automatic tailwind in everyone's mind. So that
True.
has also been a tailwind. And then the third tailwind is there's a lot of expenditure happening on Gift City by all the, not only the wealth managers, the AMCs, and also foreign institutions coming in. So there's a
Hmm.
lot of effort that has gone into uh, you know uh, building literacy around around global investments. So the way I see this is that there are going to be a suite of products that are going to be created. You will have there and there will be and I don't know if you're familiar with game theory, but in game theory there are four quadrants, right? There's a win 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 lose
Of
lose win
course.
lose lose. So global equities is a space where the thing that has stopped it from taking off for so long has been literacy, has been education. And so, if any competitor, any incumbent, anyone is spending on the space, there is going to be more education, and everyone who is a player is going to do well by virtue of it. So I
Hmm.
see this, every person coming in, every additional investor, every additional player is a net positive to the space. Now, now the question becomes that, okay, there's a suite of global financial products. I think all of them will exist. There will be one which will be more retail. There will be one which will be pre-high net worth, one which will be a high net worth product, and one which will be ultra high net worth. So I think
Makes
the
sense.
product that you are serving. So for example, for us, a product that we've seen most adoption in is UCITS. So we give access to the stock markets of we give the stock markets of Ireland and the stock markets of Switzerland and Amsterdam. And there are these securities called UCITS, UCITS ETFs. And I don't know if you're familiar, but there's this whole concept of US estate tax. So US estate tax is
Hmm.
if you have more than $60,000 domiciled in the US, that
Right.
sees up to a 40% estate tax. Estate tax is basically inheritance tax.
True.
So if an individual passes away and has $1 million corpus, basically up to 40% of that, give or take, will be taken away. And then the
Right.
next of kin will receive around 600, $700,000, right?
Right.
And so what folks are doing is they're choosing not to domicile their securities in the US. So if they want to buy an S&P 500 ETF, they won't buy SPY or VOO. They'll buy CSPX.L, which is listed on the London Stock Exchange. Or if they want to buy NASDAQ 100, they'll buy CSNDX.SW, which is listed on the Swiss Stock Exchange. And these are
Hmm.
dollar denominated ETFs. So they're ETFs, they're publicly listed, high liquidity. Um, they're tracking the same index. So you're getting the same performance. And there's no US estate tax that you have to worry about. So this is, for example, a thing that, a person who's very retail is not going to find it appealing. But for someone
Of
who's
course.
building a corpus, has a big corpus, for example, folks who have a lot of RSUs, work at US tech companies like Microsoft, Google, Nvidia, blah, blah, blah. A large
Hmm.
chunk of their net worth is already in this stock. And that stock is domiciled in, it's a US situ. It's domiciled in the US because these are US companies. So then they want to diversify that stock into estate friendly securities, which are these UCITS ETFs that I've just described to you. So that's
Hmm.
something, for example, that's working well for us. Now, at the same time, a retail investor in India is not going to. He's like, I'm allocating $5,000-10,000 a year, so this is not something I have to worry about right now. So for them, maybe using other platforms or going for the mutual funds that exist, that will be better. And for someone who is ultra high net worth, they will say that, yeah, I don't even want these UCITS. Give me a structure in GIFT, give me a structure in Singapore, give me a structure in Dubai, and I will invest through that. So I think a lot of this is happening. The space is very hot. There's a space for each incumbent, each startup, and I think uh, you know I guess the implication of having a lot of players, like I said, is just more education, which is good for
Of
everybody.
course. The more
Correct.
players that are out there, actually, the more awareness will spread, because awareness is not something that a single person or a single player can drive. It is a very larger game.
Correct.
Makes sense. No, I think, and what what you also said about the estate tax piece, and specifically, would it also be applicable for folks who are investing from India in the US and have more than 60,000 kind of invested there?
So
For
this actually
Mhm.
impacts people who are non-resident aliens. So non-resident aliens is anyone outside the US who's not a resident of the US. If you are
Hmm.
a resident of the US, the limit is not $60,000, the limit is $12 million.
Okay.
So if you are a resident, if you're in India and you have north of $60,000 of assets. So this is not only stocks, like this could be cash, could be real
Hmm.
estate, this could be anything which is domiciled in the US.
Right.
Um, so that is above $60,000, then the portion above $60,000 sees up to a 40% estate tax. So that is the rule.
Hmm. Makes sense. So it's specifically applicable for folks who are not residents of in US in that case.
Correct.
Interesting. Well, I think thank you for sharing that. I think that really brings a lot of things into perspective.
Hmm.
And when we are specifically talking about bringing out awareness, right, in terms of amongst retail investors as well as I'm assuming awareness is already present in HNIs and UHNIs,
Hmm.
but as it trickles down to the retail investors as well, uh, we will, and I think it has already started, see a large movement happening in terms of retail investors also wanting to invest in these kind of instruments,
Hmm.
given the popularity of how the Nvidia returns happened, or how the GameStop piece kind of blew up as news in a lot of platforms in India on how it performed.
Yeah.
So, having said all of that, if we were to do a thought experiment to understand what would happen if 30% of India's investor base, I'm not just talking retail, I'm talking overall,
Yeah.
30% of investor base in terms of value kind of invests in these assets, how would you see the macroeconomic landscape change?
Okay, that's a very interesting question, because today the limit for capital outflows per individual is $250,000, which is the LRS. Now, obviously, there are entities that set up structures and they're able to do 50% of the net assets of the structure. But from an
Hmm.
individual perspective, if you just look at the retail, a lot of the a lot of the valuations in India exist because there is an LRS, because folks are not allowed to send more than a certain amount overseas. And you
Hmm.
see that reflected not only in the stock market of the country, but you see that reflected in the property prices as well. Like you see that requested across asset classes wherever there's a supply shortage. And so, if you have, for example, said that, okay, now 30% of India has a financial literacy, that they know they can, that there's this limit that exists, and they can invest abroad, or, tap into asset classes, or tap into securities that exist all over the world. I think that
Hmm.
will, there's going to be significant capital outflows. So that's something that, policy should look out for. And then the second, I think it'll impact valuations that exist in our current Indian stock market. So those two things will happen if there's an increase in appetite for global investments. And yeah, I think an LRS, or a capital outflow limit in India, it's LRS, is a boon to the economy, right? Because the government doesn't want money going overseas, and rightly so.
Of course.
Rightly so. You want your country to do well. So, so I think that if more people are cognizant that this exists and start using it, then maybe, yeah, perhaps a policy adjustment, or something that needs to be looked into.
Revision might be expected or can be expected in that case.
Correct.
Fair enough. No, makes sense, right? So having said that, moving forward, what I also kind of want to know from you, and this is something that we do with a lot of founders, that kind of come on the show, is
Hmm.
try to see how the space evolves or how they see the space evolving in the next, couple of years. That's exactly what I would want to also learn from you. Is probably what kind of changes or what kind of innovations would essentially you see coming in the next 2 to 3 years that will kind of drive adoption to reach a higher penetration in the market.
I think for the global equity space, a lot of innovation is going to happen around compliance, tax, money transfer. So I certainly think that more than access, I think access is already democratized by virtue of the players that exist. So there's,
Hmm.
Alpaca, Drive Wealth, Interactive Brokers, several players at GTN, View Trade. So I think, building the rails it's fairly straightforward now. But I think the compliance, the tax, money transfer, I think a lot of innovation will happen over there. Um, and I think that will certainly make it easy. So perhaps abstracting away the complexities of tax, abstracting away the complexities of compliance, abstracting away the complexities of doing a money transfer. Like that is
Hmm.
something that today gives a lot of headache to customers, and a lot of hesitations from adoption as well. So
Fair.
I think once there's a lot of innovation and awareness done around that, I think that will significantly drive adoption, and I think that's already happening
Hmm.
today, even with the fintechs. And there are mutual funds also that have made investing in global markets so easy. Just as you're buying a mutual fund, an Indian mutual fund, you can buy a global mutual fund now, and that is basically an abstraction. So that mutual fund is a fund of funds, and those fund that which is an ETF, and that ETF invests in a bunch of underlying stocks.
Hmm.
So you're taking away the complexities from the customer, and I think that's the most important. And whether that happens through financial engineering, which is the mutual fund, or it happens through innovation and partnering with banks, building good rails and making it very seamless for the customer, both those exist. I think so. With a combination of technological innovation, financial innovation, I think that'll certainly drive adoption.
Makes sense. uh, One last question, right? I think this has also been bugging me since we started this
Yeah.
conversation. Apart from awareness,
Hmm.
what is one major roadblock that is currently stopping retail investors from getting into this space? If awareness was not a problem, to put it that way.
If awareness was not a problem, then why is a retail investor not investing?
Yeah, or
Okay.
not investing, but what is the blocker that would kind of hinder them?
Yeah, I think for a lot of people, there isn't a pronounced need to invest. So for a lot of
Hmm.
retail investors, you have the Indian stock market, you have your Indian funds doing very well. So your Nifty, exclude the last year, but otherwise it's performed well. Even on the Indian stock market, I can buy a Motilal Oswal Nasdaq 100. Today it's trading at a premium, but now they're gift funds that will
Right.
disallow, like which circumvent that premium. So I think for a lot of folks, there's not enough as a pronounced need to invest overseas. Most of their spending is in India, their life is in India. So for them to build a global corpus isn't as pronounced. Now you put that in comparison with someone like my father or someone whose children are going to go study overseas. For them, building a global corpus is extremely important because the rupee is depreciating every year. That actually impacts their spending capability in that
Of
country.
course.
But if you're an individual who is, that life is mostly in India, you're getting good returns from the Indian stock market, it's not impacting you significantly.
Hmm.
And now there are vehicles that exist, like I said, the mutual funds that give you access to those countries, to those opportunities as well. So a lot of the complexities are being taken away. And then there are obviously individuals who want the direct exposure, not because, they prefer it, but it's actually a need given their circumstances. So I think awareness aside, you just have to think customer first. That okay, if I was in this customer's shoes, would I actually want to invest overseas? And perhaps the answer for some would be no. For some it would be
Right.
yes, they would do it. So I think instead of me generalizing the entire country that okay, what's stopping a customer, what's stopping an
Hmm.
investor? I think that generalization is unfair. I think there are some investors who it's not the right product for them. Not every financial product is right for an individual. And there's some
Fair
people
enough.
for this set of customers, we go after it's perfect for them. And we just focus on them. Like our job is not to boil the ocean, right? Our job is to just serve a few customers extremely well. So that's what we're doing.
Makes sense. Makes sense. I think very well put. And that also kind of gives a perspective to us and our audience as well in terms of how to look at this market and who should kind of look at it. Thank you so much for sharing that. And Nitish, I think with that, we'll wrap this up. I think it has been a pleasure having you here. And we got to learn a lot from you. Thank you so much for being here.
Yeah, thanks, guys. Thanks for having me.